what is the most common mistake you see people make with their money?
Oh, that's a good question. Inaction and the ability to know where to go.
What I kind of want to do for the next 10 minutes is get people to think differently. So I'm going to ask you to put your financial advising hat on a little bit. I donate to charities and pay a tithe. Couple that with me paying way too much in taxes. Walk me through what you guys often do so that you can do that the most optimal way possible. Walk me through kind of how that looks.
First of all, if you're over your 70, we should be doing. People miss those types of things all the time.
Mike is the owner of Capita Financial Network. Capita was funded back in 2008 and now manages billions and billions of dollars in assets for its clients. Mike has built his wealth from business ownership, from investing, private markets, real estate, all over the spectrum, and now he helps his clients do the exact same thing. He is the embodiment of what networking can be and one of the most well-connected people I've ever met.
My entire life really got flipped upside down after we had Millie and Graham. We had about a 5-year gap where we had stillborns and miscarriages. And basically, we ended up doing IVF and we had a surrogate lined up and we did genetic testing because I'm a control freak. So I was like, hey, I'm going to make sure this kid is genetically perfect. I can write a check for it. And we went through that process and we had Rudy. Rudy's the biggest blessing in my life because A, it taught me I'm not in control. And it really helped solidify my relationship with my wife to go through that experience, that 5-year struggle to have that third kid. He's our glue and he's everything I needed, but I didn't know it.
Mike, thank you for joining us. I'm super excited to dive into this. So give a 30-second little bio. Who are you? Where are you from? All that kind of stuff before we jump in.
Fantastic. Yeah, Mike Littledike. I am actually originally from a small town here in Utah called Camas by Park City.
Yeah.
My dad owned a small pizza shop. I lived upstairs, got tons of free pizza and ice cream and whatnot. But yeah, when I went to college at UVU, had an idea to get into the financial world, learned a lot of things and basically built Capita Financial Network in 2008, the year I graduated.
Dang.
Out of necessity of wanting to find a place that I could invest my own money and to use the principles that I learned at an early age on how I wanted the financial world to look like, for me at least. And I built that out. And today, currently, we have a little under $2 billion under management. I have 55 or 60 amazing employees and team members that work here, have an amazing executive team, about 18 certified financial planners. So we're really excited to not only help the people here, in Utah, and we've gone national, we help people all over the country, but it's been really fun to be able to share our message, not just with me meeting with clients one-on-one, but to be able to broaden that message and have 18 amazing advisors out there sharing the message of Capita and helping people one-on-one. So that's really what we do.
I'm excited for this one. I've done a bunch of different guests on this podcast. My whole online presence is around financial literacy. And I have been, critical is the word I'm going to say, about traditional financial planning, just because your industry is changing so much.
Sure.
We met a couple months ago, talked for hours, and with everyone I've met, it is so rare to find someone in this industry that aligns ideologically with me in investment strategies and what can actually be done and how to be that top 5% of advising. So I'm excited to jump in for my listeners, millions of people that are interested in financial literacy, with someone that has built it, done it, grown it, but isn't brainwashed. That's probably a terrible way to say it, in the traditional way. So I'm super excited about this. So 3 different sections inside the podcast. The first part, we're going to go through audience questions. We always let the audience ask the first 6, 7 questions. So we'll jump into that, and then we'll get into your story. The first one that they asked is, how do you think AI will serve your business in the future?
That's an interesting one. So just 2 days ago, we had the main AI manager or director at Meta talk to us
Cool.
with a small YPO group that we have. And it blew my mind what they're working on and what the future of AI is looking like. And for me, it's a little overwhelming to think of what's out there and what's available, but also how do I apply that to my company? And so for us, we're obviously using it for marketing. We're excited about communicating with our clients through AI. We're still working on that. But I think AI, the way he explained it is AI can be used to kind of, if you could think of hiring, 100 freshmen out of college or whatnot, what can they do? AI should be able to do those tasks inside of your business. And so I think the gold rush here is, of course, the big companies, they're using it. Yeah. But how does a small to medium-sized company take all that data and that information and apply it to your company? We're looking for resources to help us. The local colleges here even have programs around it. Yeah. So we're in the middle of using it and implementing it, but I'm just kind of excited about what AI can do, not to replace our our folks or replace our industry,
Yeah.
but to enhance it and to make
Yep.
communication clearer, faster, and allow people to get back to us faster.
Throwing a question at you that I didn't prep you for, but curious your thoughts. So, inside of the financial advising world, there's robo advising.
Yeah.
There's also like quants,
Yeah.
people that, and algorithms that will trade
Sure.
based on indicators, right?
Yeah.
That's been around for a long time.
Yep.
Do you see a world where AI kind of finds its way into that and starts trading stocks based on what it believes? Does that make sense?
It's already there. So
Cool.
there are quant models that use AI.
Cool.
There are fantastic robo-advisor firms. I think all of those things can be great. I think what I've learned meeting with thousands of clients and thousands of folks who we've been able to educate and help with their finances, what I've learned is that financial planning and wealth management is probably more psychological than anything.
Yeah.
I think we talked during lunch about, the average, Vanguard put out a study about their average return was, I can't remember the number, 7 or 8% if you owned like the VOO or something like that.
Yeah.
But they did the data on the actual investor earned probably half of that because of emotions and about timing and about greed and fear and all those cycles that we go through. So what I think AI can't, where our industry needs humans and needs that interaction is on the emotional level to take someone and their goals and their aspirations and try and find the right investments that meet their specific needs.
Yeah.
And so I always say, people say, what did Capita earn last year? What was your rate of return? It's like, we didn't have one. Every single client has a specific situation and a specific goal. And it's our advisor's job to get to know them and their family and their needs and build a portfolio around that.
Yeah.
So AI can help us do that. They can help us, like, for example, instead of buying the S&P 500, we can use technology to help us own each individual stock directly so that we can do tax loss harvesting and things like that. So AI and technology can help us with that, but it's about getting to know Braden and knowing what are your goals? How old are you? What are you trying to accomplish? And building the portfolio that fits your needs, and then making sure you have accountability to that as well.
Yeah.
Because what computers have a hard time doing is telling you, well, hold on a second, don't sell in the middle of COVID.
Yeah.
Let's hold on and let's let the portfolio work itself out. I remember during COVID, we were working like 15, 16-hour days, just communicating with our clients, not to persuade them to do one thing or the other, but to remind them of the plan and say, we didn't prep for that, but we prepped for recessions and downturns. So keeping people on the plan and accountability, I think, is what's the most important. I know I went off on a tangent there, but
no, it's spot on though. And that's what inside my industry as well, we're using it. These guys use AI constantly. My marketing team, a lot of that is, but the one thing that it can't do is think emotionally like a human being. That's where it's struggling to get there. It's great at doing a lot of grunt work, but I think you're spot on. Okay, next question they asked. What is the most common mistake you see people make with their money?
I would say I had a conversation this morning around someone who actually follows your channel. They know what they need to know. They want to do it themselves, but they lack the time and the ability to take action. And so I think, and it's interesting, probably our average client that we work with here at Capita is a doctor at one of the local hospitals where they just worked and they had a 401k, they maxed it out, and then they go to retire. Then, here you go, here's your pension, your 401k. They built up that wealth systematically. So I think people need to take action and also not take action when things go weird, right? So I think it's the ability to take action and to know what to do. And so I just see people make mistakes, like they make really big mistakes in a very short period of time when they shouldn't have done anything, or they should have done something. So I think inaction and the ability to know where to go.
Yeah, smart. Okay, we talked about this one at lunch too. It's funny. My questions are their questions. What are your thoughts on crypto? Do you personally have any crypto, and what are your overarching thoughts on it?
So I'll back up and say what I'm most excited about is the blockchain technology. Of course, crypto is fantastic, but the blockchain technology is going to probably create one of the first trillionaires on earth, so there's going to be a lot of wealth created in that technology, because you think about how clunky our system is with ACHs and wires, and you go to Africa and you're changing your dollars over 15 different times. So there's a need for the blockchain technology. Do I own crypto? Yes. Do I have a large percentage of my investable assets there? No, but I have some just to be relevant and to be a part of the ride. And I find it very interesting. But would I put, a ton of my wealth into one or two of those coins or into any of the technology? Not yet. I haven't
Yeah.
quite figured out. And the other thing I was mentioning at lunch, even if you own the S&P 500, indirectly you're kind of owning the blockchain technology because all of these companies are investing in it. So you do have an angle there. But for me to make a wild bet on Ethereum or Bitcoin or something like that, I've bought some just for fun, but not deep, not super deep.
Honestly, that's what I say. I've done a ton of videos on like allocations of portfolios just for kicks and giggles, and
Yeah.
it's fun. And I usually say 1 to 2%.
Yep.
Like, I think it makes sense to have exposure just in case they can do what they say they're going to do. Losing 1 to 2% of your portfolio isn't going to kill most people.
Correct.
But if it does it, it'd be a nice little return.
Well, and the other interesting thing about crypto and blockchain is that it's still the wild, wild west a little bit. And so, I had money, I owned crypto in Voyager, for example. That's a custodian.
Yeah.
Like we think of Schwab and Fidelity, and lo and behold, there was no regulation around the way they held it. And who would have thought that Voyager would have been my risk rather than even Bitcoin?
Yeah.
And so there's a lot of things out there that we just don't know yet. And even for me, embarrassingly enough, I think I sent an altcoin to the wrong wallet and lost it, right? And I called the guy up. He's like, it's in the meta space. Who knows where it's at? Like it's gone. And so even I feel like I'm pretty good on the computer. I made that mistake by fat fingering that button and it was gone. So there's risks that people don't understand, but in general, I'm excited about it.
Yeah, that's cool. Okay. At what age should I get a financial planner?
Oh, that's a good question. So I think you should be on your financial planning journey as early as possible. My kids are 10, 12, and 4, and we have green light accounts for them on they're on the phone yet, but on my phone to help them buy stocks and to learn when every time Amazon boxes show up on our front doorstep, Millie's excited because she thinks she's made money because she owns Amazon, right? So I think you want to be on that journey to have a financial planner. There's lots of different types of financial planners. For us, it's when your wealth becomes complex enough that you need help beyond what you have the time to do, which, I don't know if it's an exact number or whatnot. Capita, we do not have minimums with how much people have to put with us because everyone's on their journey at a different time. But for us, I think it makes sense, when you have $100,000, $200,000 where you've kind of graduated past just maybe a mutual fund or an index fund, I think it does make sense to have a financial advisor. But I think, we have resources, you have resources where people should be absorbing that information on YouTube and Instagram so that they can know what to do themselves. But even for me, I focus on my business and all of my real estate assets and my other private investments. I hire or allow other people to help me with those. So it's really when it gets outside of your wheelhouse, that's probably when you should get some help.
Yep. Completely agree. Okay, last kind of question. I'm going to put 2 questions into one. It said, what sets you apart about your firm, and how do you establish so much trust with your clients for them to send that much money over to you?
Well, that's interesting. So what makes us different, I think, our culture, our desire to educate everybody is a big deal. And, persuading people to trust us and work with us. I mean, when I first started, I was 25 years old in fact, the client that you met on the way out when you were walking out, that was one of my earliest clients.
Oh, that's cool.
5 years ago, we were doing a review with him, and we were talking about everything. He said, how old, my age came up, and I think I was 38 at the time. He's like, wait a second, you're 38? I'm like, yeah. I'm 42 now, but I was 38 then. And he's like, how old were you when I gave you all of my money? And I'm like, 25 or 26. He's like, what was I thinking? And I'm like, I don't know, but it worked. And we were there for you. So those early years were hard, but as you do what's right consistently, and as you build that trust with clients, and of course, we're very careful with the way we set things up with not taking custody, having things at Schwab and Fidelity and safe places. So we're just investing that money. I think just by doing what's right over time and communicating with the clients and picking up the phone, that's really what sets us apart, is having that individual relationship with a client. Because I can't control the markets, but I can control our communication through that. It's like any relationship. There's ups and downs. It's your ability to communicate through that. So I think that's what sets Capita apart, is all of our advisors are on the same page where we really want to communicate and get to know those clients so that when something happens, we're able to communicate through that. And so I think that's just our deep bench of talent here at Capita. Like our folks are amazing here.
Yeah. I also feel like most people don't understand inside of this true opportunity cost inside of financial planning. Like, to your point, when should you have a financial planner? What sets you apart? it probably doesn't make sense to have a financial planner, financial advisor at $10,000, $20,000 because the opportunity cost isn't there. It
Sure.
makes sense just put it in a VOO,
There you
VTI.
go. Yeah.
Don't pay someone absorbent amount of fees to go do that. Like watch who use a Vanguard, a Fidelity, a
Mhm.
Schwab, someone like that with low cost index funds. But eventually you're going to get to the point with complexity and with size that there are so many opportunities that you're not capitalizing on because you don't have the time to go learn it.
Exactly.
We'll jump into some of those in a little bit when we walk through Capita's journey. But just little stuff like donating the winners, selling the losers,
Yeah.
tax harvesting out to save
Yeah.
money, like that type of stuff is I don't have time to do it.
Correct.
And
Yeah.
I shouldn't have time to do it or else I'm not actually doing my real job correctly.
Yep.
And that point's gonna be different for everyone. Some
Yep.
people that's 25 years old
Yep.
because you're a budding doctor, attorney, something else.
Mhm.
Some other people that's 35 years old because you now have a 401k that's amassed some wealth in it.
Yep.
It depends for everyone, but you have to get with people that actually care.
Yep.
I'm not going to use any names right now, but there's just so many financial advising firms out there
Yeah.
that just take your money, charge you a percentage, and go put it in a mutual fund that you could get yourself.
Yep.
That quite literally is it. I had a client come to me, wanted to do a syndication. They're like, let me take this to my financial planner advisor. They took it to him. The person literally said, what's a syndication? And they're like, you don't know what this is? They're like, no. And they're like, go research it, and just sent them on their way. They had
Yeah.
their financial advisor had zero intention of ever growing themselves and learning.
Yeah.
And so it's going to be different for everyone, but that's probably been my favorite part of our conversations
Mhm.
is that you understand the higher level opportunity costs of these people. And a lot of the big dogs do. The people that have billions of dollars and hundreds of millions of dollars, their advisors know
Mhm.
all this stuff.
Yeah.
But for you to give that to the teachers and the doctors and the
Mhm.
attorneys, it's an opportunity that just most people don't get. And I think it's pretty cool. So
Well, and we get excited about it too, because you think about if you've got $100 million, how can we change their life and make it better? Sure, we can
Yeah.
increase their rate of returns and hopefully, create some efficiencies there. But you think about what if you're a nurse that retires with $100,000 in your 401k and that's all you have? That person needs help probably more than anybody,
Yeah.
and they can't make a mistake. And
Yeah.
so for me, it kind of gets me excited to think that Capita can help all of these people at different levels so that we can help the people that need it most, but not, unfortunately, like even when I first started, most financial advisors that work with the smaller tiered clients, they end up selling products that pay commissions and things like that. That's
Yeah.
how the business model works.
Yep.
And so like a lot of these insurance agents, not to say we don't need insurance, but a lot of times they're pushing products that pay a commission so that it then justifies meeting with that
Yeah.
client.
Yeah.
And so we've really tried to get rid of that where we just want to help folks that need the help at the level they're at. And I think that's what's kind of exciting about Capita.
That's really cool. Okay, let's go through kind of your journey. I want to hear your story a little bit.
Okay.
So you went to college. You started immediately out of college. You started Capita. I didn't even know that.
Yeah, I kind of started in the middle of college. I had an entrepreneur class at UVU and basically started it from there. It's the only B I got in college was in my entrepreneur class, by the way.
Jokes
Like,
on them.
I think I rubbed him wrong when I asked him which business he started and he didn't start one.
Yeah.
So but that was an interesting story. But yeah, I had an idea. I did sales all through college. So I served a mission for my church. Loved talking to people and communicating with people. So I learned, okay, I like working with people and getting them to take action towards something.
Yeah.
So I did all sorts of sales jobs throughout college, phone sales, door to door, convention sales, things like that. So I actually started to make pretty good money in college. And that's where this whole journey started. People say, well, how did you know you wanted to start Capita? It's because I had money and I kept making mistakes with it. I was doing penny stocks. I was doing hard money loans without proper collateral. And so
Yeah.
I was making all the mistakes in my 20s. And so I literally built Capita out of necessity and to help folks like my parents make sure that they could get the right education to retire so that I could get the education to build wealth. And so I made all my mistakes in college. I made mistakes since, of course, but I made the big mistakes on money in college and learned what not to do. And I literally, I got married in 2006. We had a couple real estate deals go bad because I didn't collateralize them properly. And so I ended up in credit card debt because of that, because you could write checks back in the day against your credit card. I had a couple people here in this office actually that invested with me.
Wow.
We put the money in there. It was gone. And then so I wrote them back to take care of my friends and family on that. And I told my wife the day after we got home from our honeymoon, hey, by the way, we're like $85,000 in credit card debt. And she's like, oh, that would have been nice to know at like 35% interest. So like out of necessity, I started to think through, okay, of course I need to get out of debt, but what's the right way to build wealth going forward? So it gave me that incentive at 2:00 in the morning to write out my business plan. So I wrote Capita's business plan out in my basement in fear and in torment in that moment of like, okay, my wife's not mad or not happy with me right now. I've got to figure out a way to provide. And so I wrote that out, and I should show it to you one day, because it actually is exactly what we built today. It took me 10 years to get it to where it was.
Yeah.
But it was really fun. I built it out of necessity because I just wanted to provide a place where someone could get independent advice. We don't want to be owned by one of those big brokerage firms, or we don't want to have an agenda. We just want to help people get to their goals. And that doesn't necessarily mean that everyone has to be our client and that we're the only firm out there that does that. But we're just trying to help as many people as we can. And through platforms like yours, even those who decide not to become our client, we'd at least like to give them education around it. That's where all of our education platform is free. It's just there for people to do it themselves if they'd like.
Yeah. So you started in 2008. What was the growth like that? How long were you by yourself? When did employees enter the picture? Walk me through like the first 5-7 years kind of a thing, how you started to build as a business owner.
Yeah. So in 2008, I mostly was selling life insurance and annuities and things like that. That's how I started in the business. And it was just me. I had this aha moment of, okay, what is, I realized I was selling my friends term life insurance to help, like friends that just had a baby or whatever. Hey, you need term, I can do that. Then I started to meet their parents and then their grandparents and realized like, hey, the real money in that world is in the 401k IRA world. So I said, well, what does every 60-year-old person have in common? Well, they all have Social Security, not all of them, but most of them have Social Security. So I decided to become like a Social Security expert all by myself. And so I just kind of did my research. Then I started to pay for mailers. And so keep in mind, I was still in debt, and I was telling my wife that I was spending more money on a website and on mailers, and I'd put like 5 or 6 people in a Marriott conference room, and we'd do a presentation on Social Security. So I started to provide education about Social Security and Medicare and tax planning. And so I just started to get a client one at a time. That's where that client came from, was one of those Social Security presentations. And so I was literally doing that out of the backseat of my car, met with them in their front room the first time, and just started to build that up. Then I got a small little office, and then my first big decision was to hire an assistant. And that was hard because you think about like,
how many years did it take you to get to that point?
Couple of years. I think it was longer than it should have. That should have been. So that's maybe some advice. I should have hired some of that stuff out earlier, because I was up till like 3 a.m. sometimes doing applications and doing things that I shouldn't have been doing. I should have had some help along the road. So I think it was a couple years. Then I brought on Cassie, who you've met, and she was a spitfire right out of college.
She was a day one with you. I didn't know that.
She was. Yeah, she came out of college, and she just, as you know, she's a fireball. She's amazing. She can get anything done.
Incredible leader.
So she was, my second hire. Then I brought one of my buddies from college who was doing door-to-door sales. I brought him over to get his licensing. Then he became an advisor. And then a big hire was Zach Call. So that was Tyler Williamson. And then Zach Call, I ripped him away from Fidelity. And even to this day, it doesn't make sense, because I think when I pulled him away, we had $80 million under management. So you're on the math on that. That's not a lot of money to like handle all the salaries. Yeah. But I was lucky enough during 2009, 10, 11 to invest all my money. And I was able to have my own little pool of wealth where I could take that risk. And so I talked Zach into coming over, and I said, trust me, this will be amazing. Let's build something amazing. And from 80 million up to 2 billion, Zach has been a really integral part of doing that. Both Zach and Cassie have been huge in making that happen.
There's so many. Okay, I'm going to pull a couple points out of there. First one is, I talk to so many business owners, and there's two ideologies around business. The first one is, you see companies like Uber and Airbnb and everything, Twitter, where they just dump every penny ever. Like, they've run losses since the day they began. And so you see a lot of startups do that same thing, and they make no money, and they're just dumping. And the business owner never takes a moment to say, what am I building outside my business? You know what I mean? Not saying that you have to put a ton of time into it, but I would say the majority of small businesses in America should have their owner should be investing outside their business in one way or another. And so many of them don't. Yes. And this, because I did the exact same thing. Okay. So I started Fulcrum, grew it. We hit COVID, rates dropped.
Yeah.
I had to hire a ton.
Yeah.
And it got to the point where I couldn't make money, But because I was a loan officer and made good money for a year or two and I had
Yeah.
money set aside, I was like, I don't need a salary. In fact, I can live off my war chest. I can even go pump some money into this so I can make the hires so that it can grow.
Yeah.
But as you play that fiddle back and forth a little bit so that both can scratch each
Yes.
other's backs, it's very, very valuable. I feel like sometimes we read these books of Elon Musk and Phil Knight, Shoe Dog, and you're
Mhm.
like, oh my gosh, I got to be like them. Every dollar's got to go back in there. I'm never going to
Yeah.
invest myself. And while that does work for some, I would say that's actually probably not the most optimal path for the majority of people.
And that's fantastic advice because we teach people the same thing. Take chips off the table if you have. I mean, of course, you want to put all your time and energy into that company, and that's where we come in, is we can help with all the ancillary things outside. But you're right. When you look back at my journey, it was because I feel like I got somewhat lucky because in 2010, real estate prices looked completely different than today, right?
Yeah.
So I was able to buy a lot of real estate and a lot of good stocks and things like that at really low amounts. So I invested first and I built that wealth that way. And then I built Capita around me so that I could use it to be my financial advisor, basically.
Yep.
And so that allowed me to never make a decision out of desperation. Because a lot of business owners, you think about laying people off or whatever. Like, I've never had to make a decision just for money. I've made it for what's the best thing going forward, not just today, but 5 years from now, 10 years from now. And so I've never had to like do something because having that emergency fund, if you will, is everything. And so, yeah, I've always, like we said, I threw out seeds the whole way. And now looking back, we're in 2024, I really started investing heavily in 2009. And to see what's happened over that time period, that 15-year time period, it's kind of crazy outside of my business.
Yep.
Yeah.
Yep. And it's the other piece I pulled from that, I've a couple. So many business owners, I would say almost every single one I've ever talked to said it took them too long to hire their first employee.
Yes, that was me.
Same with me. It's every single one of us. It's a scarcity mindset.
Yeah.
Because it's a large responsibility. It's hard
Yeah.
your first time to say, like, I was okay as a business owner saying I'm in charge of my family. Like, if I fail, my family fails.
Yeah.
I've got that on my shoulders. I can do it. But to take that next step of saying, if I fail, their family fails, that's hard.
Yes.
It is a hard mental risk to take.
Yeah.
But business ownership, it's not true business ownership until you start utilizing other people's time to grow the equity of the business you're creating. And that would probably be my biggest piece of advice. I have so many people, because of inflation and where we're at, wage growth not keeping up, so many people are having to grab second jobs or start side hustles, start businesses. Small business ownership is blowing up in America right now because out of necessity.
Yeah.
And so for all those people that are in those beginning stages, save up outside the business. I'm almost telling you two different things. Save outside the business, but also don't be afraid to invest in the business because it's going to be different phases of your life and different times. But every business owner wishes they would have done it quicker. So please, counsel or consequence. There's two ways to learn, okay? Don't learn from consequence like every one of us. Learn from counsel, hire quick.
That's fantastic advice. And really think about business growth. There's two iterations. There's, running the business by yourself, and maybe you're doing $20 or $30 an hour work when you shouldn't be, when your hourly rate is more, so hiring those employees to help you with the work so you can focus on the most important activities of your job, of your business. So there's that. And then the next iteration for me was after hiring a bunch of employees. 10 years ago, Capita was still kind of the Mike show. And I was like, oh yeah, I have all the clients. And I had to put my ego in my back pocket a little bit to say, Capita needs to be something bigger than just me. It needs to be, a brand that can go national and whatnot. So it was really hard. Like the client, I keep bringing them up, but the client that I just saw in the hall this morning, it was hard to say, hey, Tyson, I want you to now manage this relationship and have that client work with them because he's better than Tyson is a better advisor than I am, period.
Yeah.
So to do that and to say, I need you to work on this couple and take that over and manage that relationship, it was kind of hard to step away from the day-to-day role on everything, but it was fun. A couple of years ago, I wanted to do a trial run to like leave for a month, put my cell phone away, and I went to Africa with my family for a month. And it was really interesting because I came back and everything was still here. I was like, oh, you actually don't, I mean, they need me for growth and things like that, but it's like, the company's working beyond me, and not that we're looking to sell or anything like that, but as a business valuation, guess what that did to my multiple?
Oh, it
By
goes through
making
the
it
roof.
not about me and to make your business not about Braden,
Yep.
it increases the valuation of the company, and it makes it so that one day you could have an exit if you chose to. So on accident, I ended up doing that and empowering a lot of amazing people to run the company and to do things that I'm not good at.
Yep. And we're doing a lot of business ownership. We'll jump into the finance stuff here in a little bit, but I think this is great stuff. Business owners, we have huge egos. We need to because we think we can do something better than someone else, and that's why we start businesses. But it is a huge ego check because you are likely the most talented person at wearing every single hat, and that's why you were able to start a company. But you are not the most talented person to wear each hat individually.
Yeah.
And that ego check is a hard one to take.
Yeah.
But you are not the best salesperson or the best marketer or the best operations manager or the best any other thing.
Yep.
You are the best one at wearing every single hat. And once you start to hire those, your job duty becomes more about growth and vision than it does daily operations.
Yep.
And that's when you really get to start to see the compound effect. And it doesn't have to be with $2 billion assets under management. That may be unrealistic and almost unrelatable for some people on here, but it's the little stuff too. It's start a window washing company, but don't plan on putting the flyers down, upselling them into other things, washing the windows, and then running the books.
Yep.
Start all, wear every single hat, and then find a high school kid that can wash the windows, train them how to do it so you can go knock more doors.
Yes.
Whatever it is, whatever your side hustle is, you've got to check the ego because you will be your own glass ceiling.
Yep.
And until you get out of the way, you will be capped. And that would be probably the primary reason the average business owner does not get past 5 to 10 employees is because they keep their hands in everything.
And to your point, what probably fires me up the most right now is watching, of course, the growth of Capita with our clients, but the growth of our employee base. I mean, we're here in this brand new office space.
It's gorgeous.
It's the whole idea was we wanted to get everyone together. And this is like this is my second family here. And to think that Capita provides a living for all of these people, it's really fun. We had a big party in my backyard in the summer with all the employees and their families and whatnot and the kids. And I was like, I just kind of sat back and I was holding my wife's hand and I'm like, this is something that we've been able to provide for all of these people. And it's been, to me, that's what gets me up in the morning is the fact that we're building something beyond just us. And it was just really, it was really rewarding for me to see how many families are taken care of because of Capita. I love that.
That's really cool. Okay, last thing in the business, and then I'm actually going to transition. I don't usually do this in podcasts, but I want to go through a couple like stuff just to make people think different. I'm actually in the middle of reading Killing Sacred Cows right now for like the third time.
Yeah.
And so I want to kind of run them through an exercise. But last thing, financial planning 15 years ago was very different than now, very different than 15 years from today.
Yep.
Like I think both of our industries, mortgage, real estate, financial planning, is going through a really big paradigm shift right now. When you're talking to the average person looking at financial advising to help them try to predict where it's going and how they can set themselves up best for future, where do you see your industry going and what would be your advice for that person?
Yeah, so you think back in the day, financial planning was more commission and sales oriented for the folks. You think about like A-share mutual funds and insurance policies, things like that. Then it moved into, more the C-share mutual funds where it's like, okay, we're going to sell a mutual fund, but we're going to get paid as we go. And now we've moved more to the fiduciary role of where you're really paying for service and you're really having to provide service, not necessarily the product, because the product has become commoditized. I mean, when Schwab came out and did free trades, I don't know if you remember that, but that was like a big shock in our world where all of a sudden they said all the trades are free. Tanked TD Ameritrade stock, then they bought them. And then Fidelity did the same thing. So it's really interesting. So now through technology, we can mimic a mutual fund or mimic an index fund. And you have to pay you have to get the technology somewhere, right? Or pay the money manager from somewhere. But the actual trades are free now for most stocks that you buy them. So that's changed everything where, I was mentioning that Greenlight account. My kids can buy a fraction of Google or Apple for $5. And so you've got the technology there. So technology is commoditizing the actual investments. And where you're going to see the most need in our world is the service and the education. Thus, we're doing things like this where we want to educate folks and create that glue so that when something pops up, they can trust us. So it's about that relationship. And so for me, the financial planning industry is moving more towards service and relationship and education. And then, of course, layering on investing the right way.
Love it. My whole platform is based on education.
Yeah.
And I had no intention of building this community.
Yeah.
Like I was just, you can ask everyone that started with me. It was like, oh, if we can get to 10,000 followers, that's awesome. I just want to help my family and friends. But people gravitate to it right now more than ever because the internet gave them free trades. Robinhood came out and high schoolers were day trading penny stocks.
Yep.
Like we had this wave of financial ability without the literacy.
Yep.
We all realized there was a gap now, and now they're trying to fill that gap. And where I see the next phase of this, and where I think it's almost a scam in America, is that there used to be a big gap between the services provided to classes because of how the industry worked. And so it drives people nuts when they hear Jeff Bezos didn't pay $1 in taxes last year, but we watched his net worth go up by $100 billion.
Yeah.
And we hear about them making someone investing in the seed round of Twitter, and they were also the same person that did PayPal, Airbnb, and Uber. And you're like, how are they getting in these circles? But that opportunity and that gap is starting to close through the right network.
Yep.
And I see financial planning and financial advising filling that network. Like Capita, like you can come in, yes, you can go index against stocks and build a plan for us. You can also help us like tax planning. And if you want to go to a tax attorney, it honestly doesn't make sense until you're making millions of dollars a year.
Sure.
But the doctor and attorney are the ones paying the most taxes on a percentage basis inside of America. And so we have to shrink that gap.
Yep.
And in my opinion, that gap shrinking, that void is going to be filled by you guys.
100%.
And so it's really fun to watch an industry change. Well, that's a lie. Some companies in industries change, evolve to feel a need because America, a majority of Americans are ticked off at that gap.
Yeah.
And now there's real companies coming in to fill that gap to look out for the everyday person.
Yep.
And I think that's so cool. Okay. So what I kind of want to do for the next like 10 minutes is get people to think differently. So I'm going to ask you to put your financial advising hat on a little bit. Online, I have to dumb down my videos because I have to give the best advice for the most amount of people in 90 seconds.
Sure.
That's my role. Now, I know that 20% of people are not going to agree with my advice, and they shouldn't because there is no tailored advice for 100% of people. But what kills me is I often can't talk on these more complicated structures because it doesn't apply to enough people, and I would actually probably hurt people giving them just a little bit of it without more of it.
Sure.
But I want to talk through some of those different structures so that people can see what's available out there. What are these billionaires doing? How are they tax loss harvesting? So let's go through one that we were talking to lunch, okay?
Okay.
I donate to charities and pay a tithe. I've talked about it often, okay? I'll give 10% of my money away to my church, and then I'll also do charities.
Sure.
Couple that with me paying way too much in taxes. Walk me through what you guys often do inside of your stock accounts so that you can do that the most optimal way possible. Yeah, walk me through kind of how that looks.
Well,
did I set that up properly?
You did,
Okay.
and it depends on your age and wealth and what you're trying to accomplish and whether or not you own a business and whether or not you have rental properties and things like that. But in general, what we were talking about is, first of all, if you're over your 70 and 70 and a half actually, and you have IRAs or things like that, like we should be doing QCD. So most people don't know about that. It's a qualified charitable donation. So people miss those types of things all the time. But let's take us, for example, someone that has maybe a brokerage account, after-tax account, and you want to be diversified, but you buy the VOO. So the VOO is a smashing up of different stocks. Some are up every year, some are down every year, and they average that out, right? And that's the whole point why you buy it.
Yep.
But what I was mentioning to you is what I like to do instead is I like to direct index through our software to basically go and buy that index directly so that I own NVIDIA, and I don't know what the worst performer was last year, but something in the S&P didn't do very well last year, right? So you're able to have those. And so what I've been able to do personally is I have all those stocks that I own, and even if they're index funds, that's fine. But what I do is the winners, for me, I do the same thing that you do. I give out to charity every year. So I send all of the winners to my donor advised fund. If I have a big syndication or private deal that's paid out as well, and I have a big K1 or 1099 coming, I might overpay my donation that year, put it into the donor advised fund, then diversify it. Then you have the losers you can sell as well to offset the K1 income, but the donation in the losers you can set you can offset taxes for those. But if you just own the VOO, you're getting the average, you can't do it as easily. So something as simple as that, and even for me, I can borrow against those stocks. I can double up my charitable contributions. You can do the tax loss harvesting. So there's a more sophisticated way to do that. And like I mentioned to you during lunch, I did that with NVIDIA. I bought my NVIDIA, I let it run. I've owned it for 8 years, and that's funded my donor advised fund, which is going to fund all of my donations for the next 3 or 4 years, because I was able to hold on to the stock directly rather than through a fund. So that's a big deal. And you start talking about what are your rates of return? Well, that's going to save me so much in taxes, and it helped me build a lot of wealth because I was also able to borrow against that stock and use it to do other private deals along the way. So it's like thinking of money that way, thinking of money in motion and having the right structure through Fidelity or Schwab or whatever it might be is everything. I guess to answer that question, that's where you start. And that's where you can start to really increase your wealth, is by thinking that way, especially if you're doing donations.
Yeah. And I love it. And I'm going to try to even dumb it down one level down and see if I can. So when you have a stock portfolio, if I'm selling them, I'm paying taxes, right? Everything that I sell, I'm paying taxes on.
On the growth.
On the growth. But there's 2 tax codes that we're kind of leveraging here. One, charitable donations are a tax write-off, and
up to a certain percentage.
Up to a certain percentage. And then at the bottom, those stocks at the bottom of the S&P 500, those are losing money.
Yeah.
And you only pay taxes, or you only realize taxes when you sell. So you sell the ones that are losing, so you're capturing that loss. You're donating the winners, so you never actually capture that gain. So what you've done is you've gotten rid of your biggest tax liability. You've harvested your best tax loss, and that net negative ends up being a write-off on your taxes.
So one thing to clarify, so if you have a portfolio that goes up in value, let's say that NVIDIA stock is part of your S&P allocation, and let's say that you were going to donate $5,000 to your charity, what you want to do is you donate $5,000 worth of, let's say, NVIDIA or that stock that's up a lot. Then you use your cash to then come immediately rebuy it. So you still have the same diversified portfolio, but what did you do to your basis? You brought it up. So in the future, you can sell it again at no taxes. So the idea of having your money move that way. So if you're going to donate to a charity, you want to bring the cash into your brokerage account, send the stock to the charity or your donor advised fund, then rebuy the stock the exact same moment. Then you've just got rid of the tax liability. You got your donation. You still own the stock, because what if NVIDIA or whatever rips 10% while you're waiting? So the same thing on the loss side. There are tax loss. There's rules around taking a loss as well, where we got to buy something different for 30 days. But having that structure in place, it's what we do. We have teams of people that just focus on that.
Yep. Another one that I'm going to kind of chuck out there just to get people, I'm hoping I'm just getting your mind thinking of what's kind of available to a lot of people. So I do a lot of private investments. Okay. There's public markets, there's private markets. There's a big difference between the two of them. Public markets are your traditional bonds and treasuries and stocks and all that. Private markets are usually private equity, syndications, real estate deals you choose to do, stuff that's not publicly traded, right? Up until almost now, basically, the last couple months, I have always funded my private investments with my cash. So I'll diversify and say, I'm going to go buy VOO with this money. I'm going to go buy a syndication deal with this money. That works.
Yes.
That's what a lot of people do. It's not the most optimal way to do it. What I should have been doing is taking all money and go throwing it into these accounts. We're talking about indexed stocks out, VOO or something that mimics the S&P 500, but then you can borrow against it and then go do these private accounts. And so what you end up doing is when you're borrowing, there's interest on there you can write off. You still have access to the cash. You get to go to these private markets. It's just a different way of taking a good way to invest, taking it to a great way to invest. But it takes management and time and thought processes to do.
Leverage in general is where true wealth is built. You think about the average person, their biggest asset is their house because they were able to buy it on a fixed rate mortgage, right? So debt, we have to be careful with it, because when you deal with a house, for example, if you can't pay the mortgage, you lose the house, right? So you got to make sure you can afford the payment. When you start dealing with borrowing against stocks, just some disclaimers, you got to be careful, and you want to make sure you've got backup dry powder to pay that off, because if you have $1 million portfolio and you borrow half of it, you can do that. But then if the portfolio goes down in a recession, you have a margin call. So that's what I experienced when I was in college. I learned that lesson the hard way. So when you talk about managing it, if you were to deploy something like that, that takes on an extra level of risk that you want to understand, and you want to make sure you've got triggers in place to make sure that you're taken care of. So I've seen that go south, but it's also what I've personally done because my account's gotten big enough to where if I use 5 to 15% margin on the account to go do a private deal, like we just talked about one this afternoon, and if I decide to do that, I'm not going to sell any stocks. I will borrow against them,
Yep.
and I will then use my free cash flow going forward to pay that off. But you want to use it as a short-term
Yep.
debt account. You definitely don't want to put long-term debt on like home equity lines of credit or things like that have variable interest rates and that could be called. You got to be careful on that.
Yeah.
So that's just like my like conservative side coming out. But
I love it. And there is no one size fits all.
Correct.
It does not make sense for a lot of people to do that.
Yeah.
What I want and the whole purpose of my account is just to challenge the status quo inside of the financial world.
Yeah.
You will not, it is very hard to see financial freedom working your 9 to 5, putting money in your employer-sponsored 401k account and living off Social Security.
Yep.
That is the recipe we've been sold to for 100+ years because it benefits groups.
Yeah.
Like there are literally billions of dollars promoting that.
Yeah.
Because it benefits big financial industries. But there are other ways to grow wealth, and there's better ways to grow wealth, and you just need to think differently. And there's no one size fits all.
Yeah.
But that's where, back to our original question, when should you get one? It's once you have the opportunity to start playing a different game, and that opportunity cost gets wider and wider of like, what if? If you're asking yourself, what could I do? This sounds like this is something I could do. That should be a trigger that you should be making calls.
And also if the mistake can be big enough to like blow up your life, like a lot of those mistakes I made in college, I didn't have anything to really lose. And so as you get older and you build more wealth, the mistakes you could make could be very problematic. And so once the mistakes could get big enough to like tank your life, you got to be careful. That's where we come in. And like you just mentioned, like if you're going to borrow on margin or borrow here to do this, you want to understand both sides of it before you do it.
Yeah.
And so, but I will say, going back to that point, like some of the best deals I've ever done in real estate or in private deals have been deals that have to happen. They have to happen quick. Like one of the best real estate deals I've ever done, I had to fund in 1 hour. And so because I had my Schwab brokerage account, I could wire that money. I didn't have to sell any stocks, and I made that happen. And then I was able to work the account, get rid of the margin within 3 or 4 days. But it gave me that ability to like act quickly. And so that was a big aha moment for me.
Okay. So hopefully that was helpful for some people, just to challenge thoughts. I don't usually do that, but I'm sitting with a great financial mind, so I figured I would. Last thing that I kind of want to throw at you is something that I've struggled with a lot. And I feel like a lot of people struggle with, especially once they start balancing side hustles, business owners, multiple jobs, all that kind of stuff. How have you managed work-life balance, and what does that look like? What did that look like starting this? And then what does it look like today?
Well, I haven't figured it out yet.
Dang it.
But when I do, I'll write a book on it, I'm sure. But the idea of balance, obviously, there's different times and I think it's important to be on the same page. Like for me, it's my wife, like to try and be on the same page where we are in different times and seasons of our life. At the beginning of Capita was the grind. I quite honestly probably neglected our relationship quite a bit and I regret that, honestly. I should have involved her more in the building of the business, but I felt that necessity to build it, and I grinded and made it happen. And my wife's amazing, and she pushes me to really try and find that balance where it's not balance of time, it's just balance of effort and like, for example, one of the big things that I still struggle with, but I'm working on, is when I come home, whether it's 5 or 7 o'clock, I'm all in.
Yeah.
And so being all in wherever we go. So if we're with our family, it's all in. When I'm on a vacation with her, I'm all in. And when I'm at work, I'm all in. And the problem with work with us is our cell phones are blowing up all the time, so it's really hard to put those away. But trying to give my kids everything. So even for me, if I go on a business trip, I'm trying to bring one of my kids with me and try and have those one-on-one moments with them. But my entire life really got flipped upside down after we had Millie and Graham. We had about a 5-year gap where we had stillborns and miscarriages, and the trauma that my wife and I went through during that time of trying to get that third child, it was pretty crazy. And without getting into all the details, basically, we ended up doing IVF, and we had a surrogate lined up, and we did genetic testing because I'm a control freak. So I was like, hey, I'm going to make sure this kid is genetically perfect. I can write a check for it. I got it under control. And we went through that process, and we had Rudy. He was a birth diagnosis. He had Down syndrome. And it really, like, Rudy's the biggest blessing in my life because it taught me I'm not in control.
Yep.
Someone else is in control.
Yep.
And that, and it really helps solidify my relationship with my wife to go through that experience, that 5-year, struggle to have that third kid. And to have Rudy come into our life and be that glue for our family, we were talking about that today, is that he's our glue and he's everything I needed, but I didn't know it. And so it really put things into perspective. You can build this amazing business, but what good is it if you don't have a relationship at home and you're not there for your kids? And knowing that Rudy will be with us forever is really, like I said, that glue for me and Brittany. So the business is amazing. And I've built it and it is what it is, but it means nothing if I don't have that relationship at home. So I'm really trying to figure that out. It's hard to find that balance.
Yeah.
I haven't figured it out yet, but I'm trying.
That is so cool. I think communication on the different phases is probably the place. That's what I've learned the most.
Mm-hmm.
My wife and I, when we are aligned in what the expectation is in that season, it goes so much better.
Yep.
Where conflict arises is when she expects me to be home at 5 and I'm home at 6 and my phone's blowing up.
Yeah.
Where in seasons where I'm like, babe, it's an 8 to 8 season.
Yeah.
Like, I'll come home, have an hour with the kids, we'll put them down, I'll be all in. But I need a year to grind because of this opportunity. Yeah. She's my biggest cheerleader and will help me through that and do everything. And so as people are building or going through phases or whatever it is, for me, it's just been a communication thing.
Yeah.
Because it's the unspoken expectations that don't get communicated that ends up bringing that division, where my wife will support 12 and 18-hour days if I'm in that season.
Yep.
But now she's loving the season we're in right now, because right now it's a 9-hour day and I get to come home and same thing. I need to remember to put do not disturb on because my phone will blow up. But it's just communicating through those seasons. Business ownership, people talk about doing it for freedom. Mm-hmm. It's honestly one of the least freedom jobs there is when you're looking from a time perspective. It just gives you flexibility. And that was probably the biggest benefit.
Yeah, and I think I tried to carry everything on my shoulders. I didn't want to burden her with, everything that was going on at work, because that's kind of my jam and I'm good at handling problems. But I almost felt like I was doing her a service by not unloading on her. But I should have involved her more. And I regret that, and I'm trying to be better about it. But she wants to hear how I'm feeling and she wants to help work through things. And so I'm trying to get better at that, but that's not something I'm naturally good at.
Yeah, that's cool. Okay, so at the end of every podcast, we ask the same 7 questions to every single person. And it's been fun, the more and more episodes we do, getting a range of answers. The same 7 questions to people that are worth billions versus people that are just starting their investing journey has been really fun. So it's really fun. So we'll jump through these. First one, we'll kind of rapid fire these. What are the top 3 pieces of advice you'd offer to someone who is starting their own business today?
Be okay with failure and mistakes and make them as early and quickly as possible. So you don't want to make mistakes when there's larger consequences, like I mentioned, but be okay with failure. Be okay with trying things out. I think that's why we resonated so well, you and I, because just our attitude to go try something and be okay with the repercussions. I consider that tuition. If I make a mistake, it's tuition, as long as you learn from it and you don't replicate it and figure out a way to solve it. So that's, to me, it's like business ownership and entrepreneurship is about solving problems, and it's going to take some work to make that happen. So be okay with mistakes.
It's a good one. I've heard people say perfection is the enemy of progress.
Yeah.
Too many people try to perfect and then you never actually progress. So
perfect.
That's a good one. If you were to start today, you got everything eliminated from you, you had $5,000 to your name. What would you do and how would you approach building a business?
Well, that's a tough one, because with $5,000, I mean, I would focus that on my education, and I would focus it on me. And I'm going to pivot a little bit, because you think about like, oh, should you put it in the stock market or something? No, because you look at the compounding rate of return of $5,000, it's never going to be enough. But if you can compound your own growth personally and learn lessons that help you solve a need that's out there, whether you're starting a plumbing business or you're doing a financial planning company, you're going to have to go out and try. So I would say that $5,000 should probably either be spent on, some sort of education or sales marketing funnel or something like that. And then at the same breath, what I think is really interesting is you should also invest it in your marriage, because I think this is very interesting, because it took me a long time to allow outside help with our relationship. Yeah. And it costs money and it takes time. But I was thinking about it, that I had this audible voice in my head like 6, 7 years ago where it said, you should invest in your marriage like you invest in your business.
That's cool.
Because I'm thinking about it, I've got a 50-50 partner,
Yeah.
and if I'm not investing in that marriage, then what good's the business? We've seen businesses fall apart. So something I've done is we actually budget out, help with counseling and things like that. Like not like problematic counseling, but just communication and working on the marriage. We just last weekend we went to Park City and just spent the weekend talking to each other or going on a vacation. Like that $5,000 going on a vacation with your spouse and getting your minds aligned on the business is probably as important as anything. So I'd say invest in yourself with the business, but don't forget about your partner if you're married, or making sure that he or she's aligned.
That is, I've not gotten that one. I love that. That's really, really good. Okay. What is the worst investment you've ever made, and what'd you learn from it?
There's a lot of worst investments I've made. I mean, we like I mentioned that cryptocurrency one, it was a good investment, but I made the wrong trade or whatever. So I've gone from 100 to 0 many times in my life, and those are what I call tax deductions. And so the worst investment I've made is an investment where I didn't learn and I did it twice. And so early on, I did some real estate hard money loans and I didn't collateralize, which is so easy to do, by the way. I should have, I just was too lazy to do that. So the worst investment is the investment you make and you don't learn something from it.
That's a good one. Okay, what's the best investment you've ever made?
The best investment I've made is obviously here at Capita. It's been amazing. And I would just say real estate in general that serves a purpose for me. I have a ranch in Texas, and I have a couple other things where I have real estate that I can enjoy, take my kids, take my employees, take network partners, and enjoy something that goes up in value, because I've done that 2 or 3 times where I've owned real estate that goes up in value that I can multi-purpose through the business. And I really I love that.
That's
I love that idea.
Okay, what industry are you most excited about outside of your own? So what one are you most excited about investment-wise outside of the financial advising world?
Thinking about AI, think about power, sustainable power generation going forward. I don't know the answer to it. I don't know if it's nuclear. I don't know what it is, but there's going to be an issue with getting enough power to run all of these AI models and the chips that are there. So I'm excited about that as an opportunity. And then even on a very small scale, I'm excited about the trades, like the blue collar trades, the aggregation of such trades and using technology to bring into those. Even trying to get someone to come to my house to help me fix, something at the house. It's hard. There's a big disconnect there. So I actually think there's a huge opportunity in the trades.
I completely agree. I'm working on that. Okay, last kind of question. Looking back, is there anything you would have done differently in your career?
Well, I don't think that way per se, because once again, that's tuition, right? Do I wish I didn't pay tuition? Sure, but I hopefully learned something from it. So everything I did, I hopefully learned and adapted and pivoted, but I don't really live life with a lot of regrets. I'd say I kind of mentioned it. I probably should have invested more heavily into my marriage and into my relationship early on, just to kind of have her be part of it. But that's also part of our journey, and it's what made us where we're at today. So I'm good with everything that I've done.
That's the perfect answer. Awesome. This has been a lot of fun. I really do enjoy sitting down with hyper successful people, breaking down complex topics so the average person can learn something from it. So thank you for the time. If anyone ever wanted to get in touch with you, what's the easiest way to reach out to you? Yeah,
so our company is Capita Financial Network. CapitaFinancialNetwork.com. I think I'm the only Michael Littledike on earth, so I'm really easy to find. So I'm on the website as well, but you can email us as a company, and we'd love to help anyone with any, you can literally email us and we'll just answer questions for you if you have them at no cost. So we're happy to do that.
That's awesome. Thank you.
Yep. Thank you.
Thanks for listening. Hopefully you enjoyed this, and make sure that you subscribe so you get notified for future podcasts, because we have a lot of fun guests coming.